tonight we briefly talk about Ipsas, what Ipsa is all about. Then we see, okay, tonight we'll briefly talk about Ipsas, and we'll see how we can relate it with this question that we have on the screen, which is question number one. Question number one, November 2019. November 2019. So when we talk about Ipsas, that is IPSAS. Ipsas stands for International Public Sector Accounting Standards. International Public Sector Accounting Standards. Now, for those that work in the public sector, all they do is being guided by Ipsas and other financial regulations. So when we talk about Ipsas, Ipsas are a set of accounting rules that guide governments and public sector entities on how to prepare financial statements. So what Ipsas, that is the International Public Sector Accounting Standard, does is that it ensures that public sector accounts show a true, fair, and transparent view of how public funds are managed. Now, when you're looking at the private sector, what they use is what? The International Financial Reporting Standard. International Financial Reporting Standard. But when you're talking about the public sector, the standard that guides the operation, the activities of the public sector is Ipsas. Ipsas. So the question is, who issued this Ipsas? Ipsas is issued by the International Public Sector Accounting Standard Board, like Ipsas. And this body, they operate just like the International Federation of Accountants, IFAC. Yes. So why is Ipsas important in public sector accounting? In public sector accounting, public sector accounting, they are not out to show profit, isn't it? They are not out to show loss, but in most times they can show surplus and what? And deficit, isn't it, class? Isn't it? For you should know this course more than me now. Madam Chinedu.
Yes, sir.
The public sector, they don't show profit, right? What did they show? They show
Surplus.
surplus or deficit. Surplus or deficit, because they are not out to make profit, and the funds belongs to the public. So Ipsas helps to ensure accountability. Ipsas helps to ensure transparency, and Ipsas aid comparability. Ipsas aid in better decision making. So now we have two main bases of Ipsas. The basis on which we prepare our financial statements can be in two phases. We have the cash basis Ipsas, and we have what? The accrual basis Ipsas. Now, when we talk about the cash basis, what are we referring to? Please take note. When you're using the cash basis, it means you record only cash received and cash paid. When you're using the cash basis, you only recognize income when cash is received, when it is received. And you only recognize expenses when it is paid in cash. So where expenses are not paid immediately, where they are accrued, where they are owing, it means if you are using the cash basis, you don't recognize them in your book of accounts. When you make profits and you've not yet received it in form of cash, you don't recognize it when you're using cash basis. When you're using cash basis of Ipsas. So revenue is recognized only when cash is received, and expenses are recognized only when cash is paid. That is the cash basis. I don't know if you are getting this. Are
Yes,
you
Yes,
sir.
it's
getting?
clear, sir.
All right,
Yes.
fine. So now that is cash basis. We have the accrual basis of Ipsas. Accrual basis of Ipsas. Now, in accrual basis of Ipsas, what happens to revenue? Revenue is recognized when they are earned, not necessarily when you receive the cash. Immediately you recognize that you've made profit even before you get the money in form of cash. You recognize it. That is accrual basis. And expenses are recognized when they are incurred, not when you have the money to pay for it. Even when you are owing, you receive a service, you've not paid for it. The accrual basis is telling you that you should record it as expense. Even when you decided to sell a good and you are yet to get to receive the money from your customer, but based on the price you decided to sell that goods, there is a profit margin. That profit is to be recognized. That is what accrual basis is telling you. That is what accrual basis is telling you, that you recognize revenue when they are earned. Expenses are recognized when they are incurred, not when cash is attached to it. That is accrual basis. That is accrual basis. So in simple terms, we can say for the accrual concept, revenue are recognized when they are earned, not when cash is received. And expenses are recognized when they are incurred, not when they are being paid for. Not when they are being paid for. So this is one thing we must note about the Ipsas. Ipsas. And why is it that in Nigeria we decided to adopt Ipsas? We decided to adopt Ipsas because it helps to improve public accountability. It helps to improve public accountability. And since Ipsas is a standard that is required by public sector, if Nigeria is not using this standard, we won't be able to compare the performance of our public sector with other countries' public sector, because since this is a global and standard way of doing things, public sector, for comparability with other nations, even to access certain loan facilities as a nation. This IMF, World Bank will want to check your book of accounts. Are you keeping in terms with the Ipsas? If no, they might deprive you of some of the benefits. So for you to even access certain facilities as a nation, you must keep your record based on the required standard. So Nigeria use Ipsas to improve public accountability and in order to reduce fraud and mismanagement and to align our practice as a nation with global standard. Hence, we need Ipsas. We need Ipsas. So Ipsas is a global accounting framework that ensures that government report financial activities accurately, transparently, and on an accrual basis. In our public sector in Nigeria, we use the accrual basis, the accrual basis. And we have IPSAS 1, IPSAS 17, just as we have IFRS 1 in that order. We have them, yes, based on code. Now, having laid this background, this is a question that needs the application of IPSAS, that's IPSAS to solve. Now, I don't know if somebody can read this so that it will not be that only me that is talking. And now, can somebody read? You read very fast. The question is long. Or if you are still very busy, I can hear some background noise on the part of Chinedum. So um, maybe I will read. I will read. Um, so the question is, Ogogo local government is one of the 26 local governments in Alimosho State of Federal Republic of Wazobia. I think Madam Chidima will give better explanation of all these names. I think these are names associated with Lagos. So the local government has adopted Treasury single account direct method and prepares its accounts using Ipsas accrual basis. Underline this accrual basis. There has been there has been widespread fraud, underlying fraud, since the retirement of the treasurer of the council about 2 years ago. However, there was no adequate information to suggest that there was fraud or misappropriation of funds. The chairman invited you to his office as a new treasurer and handed over some of the financial data from Treasury Department to you as detailed below. All figures are assumed. Question has been with us for some time. I expected us to have studied it. The revenue and expenditure items for the year ended December 31st, 2018. All figures are assumed to be correct. Now, code 1 is used as a prefix for revenue. The meaning of this is that anywhere you see a code that starts with 1, it means they are for revenue. They are revenue items. And code 2 for recurrent expenditure. It means anywhere you see any code that starts with 2, they are for recurrent expenditure. And 4 for capital expenditure. Any code that starts with 4 shows their capital expenditure items. That is the interpretation of this first. Second, notes, additional information. 3, preliminary investigation carried out revealed the following irregularities which occurred and were discovered within the year. Now, included in the payment of the expenses under primary health care department were various duplicated vouchers amounting to 7 million. It means this is a case of irregularity. This is a case of irregularity. It means the expenses associated with primary health care were duplicated. Instead of just having 7 million, they duplicate it to be what? To be what?
14.
To be what? To be 14. To be 14. Isn't it? Now that there were some falsifications in the bills for items bought for the provision of water under other charges. The total discrepancies amounted to 3 million. It means falsification in the bills. Instead of you to write 15,000, you added 3 million on it to make it 8 million. Now, it means you've increased that expense. Now, once you increase that expense, you as an accountant, and you've discovered this error, this fraud, what will you do? This, your expense side have been increased to the tune of how many? One, 7 million, the other 3 million. In total, they sum up to what? 10
10
million.
million.
10 million. So now, as an accountant, what will you do? Haven't discovered this. You
You
reverse.
correct the error, you reverse it.
You
Expenses
reverse.
are debit item, then you credit it.
Very good. So you return it back as an income to the Alimosho local government. You understand? So now, the following agreed revenue demand notices were sent to the indigents of the local government during the year. Now, during the year, these notices were sent. Local licenses and fees, 150 million. Local rates, 185 million. Rent on local government property, 175 million. So, included in the payment under works and housing is the cost of motor vehicle. Take note of this. Now, in the payment of work and housing, they included the cost of motor vehicles of 25 million. The question is, the essence of accounting is to record, to classify, to process this information, and come up with a decision. Now, when you are classifying, will you classify works and motor vehicle together? Works and housing and motor vehicle together? These are two different classifications, two different accounting heads. Now, they are now saying that included in the payment under works and housing is the cost of motor vehicle of 25 million. So when you discover your cost of work and housing, what will you do with 25 million? You remove it. You remove it from works and housing. So you get the actual amount of works and housing. While medical equipment costing 35 million was included in primary health care department expenses. Now, the issue is this medical equipment, this is a capital item. You understand? It's a capital item. It's not an expense per se. You understand? So these are capital, even motor vehicle is a capital item. Including them under expenses is wrong classification. So you need to deduct them. You need to remove them from the expenses because they are not recurrent, but capital item. So you can see the gap in that notes. Also included in the payment under works, included in the payments under works and housing is the cost of land, including construction of access road, certificate of occupancy, etc., amounting to 100 million. The land was acquired by the local government and sold to local prospective landowners at a cost of what? At a cost of 520 naira per plot. The land consists of 200 standard plots for the construction of houses of their choice. Out of these 200 standard plots, how many plots were sold? Only 150 plots were fully subscribed and paid for during the year. Now, let me ask a question. This is also part of the workings, but anything I can say in relation to the workings now, let me say it because of time. Now, you purchase these 200 standard plots of land for how much? Let me ask. How much? Go through the question again.
104 million. 100 million.
You purchase for, okay, fine, 100 million. That's included in the payment under works and housing is the cost of land, including construction of access roads, certificate of occupancy, etc., amounting to what? 100 million. 100 million. Now, to you, how much would be the cost of one plot to you? The cost of one plot to you. That the land was acquired by the local government and sold to local prospective landowners at the cost of 520. Now, this is your selling value of one plot. But to you, what is the cost of one plot? To you. How many plots do you purchase? 200 plots. How much do you pay for the plot? 100 million. So how much will be the cost of one plot?
500,000.
100,000.
Very good.
Very good.
500,000. So if the cost of one plot is 500,000 to you, and you are now selling at 520, isn't it? 520.
20.
What would be
What would be
Alanchoma? Are you using two
Alanchoma?
devices?
Are you using two devices?
Two device on. I'm just using only one.
Okay. The echo is coming anytime someone
I don't
else
know whether
speaks.
it's the church close to me. Oh, I'm using one device.
Okay. You can log out and log in again. Let's see. So the costs of a plot to you is 500,000 naira, and you are now selling one plot for how much? 520. You are selling one plot for 520. So what will be your profit on one plot?
20,000 naira.
20,000 naira. 20,000 naira. Now, how many plots are you selling?
150 plots.
So what will be the profit on that 150 plots? What will be the
20
profit?
times of 150.
3 million.
3 million. So that is the profit. 3 million. So that is an income. 3 million. Now let's take it further. I'm saying this because these are some of the issues that if you go to the Pathfinder and you're even trying to get the solution, you will not see it, but you need to do the workings by yourself. So included in the payment under finance department is the cost of office stationery of 25 million. Now, while the value of office stationery based on stock sheets as at 31st December was 6.5 million. 6.5 million. Now, 25 million stationery expenses is included under finance department. It means there is a working that you must do. There is a working that you must determine. Now, because what is the relationship between stationery and finance department? So it means you have to less that, and see what will come up. Now that capital grant from the state government was received on December 31st, 2017 and utilized in 2018. Take note, this is accrual basis, right? The fact that you received the money in 31st December, you will recognize it in 2017 and it was utilized in 2018. This grant has already been recognized in 2017 but utilized in 2018. So those expenses will also be recognized. So the capital expenditure paid during the year was for the acquisition of land for the new local government health centers. Some of the accounting policies for depreciation adopted by the government include the following depreciation rates. Motor vehicle, you have to depreciate at 20%, building depreciate at 2%, furniture depreciate at 10%, equipment at 15%, plant and machinery at 15%. Note, all non-current assets were purchased at the beginning of the year. It means they will enjoy what? Full year depreciation. Full year depreciation. So the following expenses were incurred but not settled as at the end of the year. As at the end of the year, they were incurred but they were not settled. So these are closing values of expenses. So now, as at the end of 2017, let's analyze so that when we go to the solution, we'll not have any issue. If these are your values, as at the end of 2017, and you are trying to prepare your account, let's say as at the end of 2018, these values here, all these values, consultancy fee of 15,000, 15 million, utility charges of 6 million, all these values will be termed as what? Will be termed as what? There will be the opening value, right? Because as at the end of 2017, these are the closing values. So in 2018, they will come as what? Opening values. Opening values. They will come as the opening values. Now, the question is this: if they are coming as opening values in the new year, how are you going to treat them? Because they've been recognized in 2017. You don't need to recognize them again in 2018, isn't it? I want to know if you are getting it. They are already recognized in 2017 based on accrual basis. So in 2018, for you to know how much your consultancy fee will be, what will you do? Will you still add it?
No,
Will
sir.
you will not add it. So it will be a deduction. It will be balance brought forward from the previous year. But when you want to get your consultancy fee for that particular year, or you want to get your finance department expenses for that particular year, this balance brought forward will be deducted because it has been recognized in 2017. So all we need to do is to determine how much is our consultancy fee for that particular year. That is what we need. We don't need what was brought forward into the current year because we've already recognized it in the period in which it occurred, in which it was incurred. So please take note of this, of these values. So when you come to solve, you will know what to do. You can see consultancy fee, finance department. It means we have to do this treatment under us, finance department. Utility, other charges. It means, okay, this will be a standalone item. Repairs and maintenance, under works and housing. Under works and housing, you adjust for it. Salaries and wages, personnel department. It means under personnel department, you adjust for it. Insurance, finance department. It means under finance department, you adjust for it. You adjust for it. So the question now is this: that you are required to prepare the journal entries to record the loss of fund, the statement of financial performance for the year ended 31st December, for the year ended 31st December 2018. Now, this statement of financial performance is synonymous to what? Is synonymous to which account that you are familiar with?
Income, income
Income
statement.
statement. Very good. Income statement. It means when you are preparing your statement of financial performance, you have your revenue and you have your expenditure. Now, statement of financial position is which accounts?
Balance sheet.
Yes, formerly known as balance sheet, but presently it is termed as what? Statement of
Statement
financial
of financial
position.
position.
position. And the other question is identify 5 external controls and 5 problems of local government in Nigeria. So now the first thing is that we are to prepare journal entries for what? To record the loss of fund. How much is the amount of fund that was lost? The value of fund that was misappropriated is what? The value of fund that was misappropriated. We've analyzed that. So what is the value? You have the question, right? Solution. The value of fund that was misappropriated. Can you tell me, please? Check your question.
7 million.
Yes, not only 7 million, there's something else again.
3 million.
Yes, 3 million and 7 million. They are the funds that are misappropriated. Now, these funds that are misappropriated, they have their personal accounts. In their personal accounts, how do you treat them? How do you classify them in their personal accounts? In their personal accounts. Now, these are expenses. In your cash book, they will be recorded where? In your cash book. Debit. It means now by the time you want to return them back to your cash book, it will fall where?
Credit.
To fall. No. In your cash book, these expenses fall on which parts?
Credit side.
You said?
So I said credit. It's going
Okay,
out.
credit, fine. Credit, fine, yes. So when you want to return them back to your cash book, what will happen?
You debit it.
You debit it. You debit it. So the A part, that we should prepare journal. And what is a journal? Let me even ask. What is a journal? What is a journal? What
It's a
is
book to correct, used for correcting of accounts.
journal? Okay, when we talk about journal, journal is the first place where financial transactions are recorded before they are posted to the ledger, right? So, when we prepare suspense accounts those days, we usually prepare journal too. You understand? You say based on error, after writing in your debit and credit side, you now say based on error of this, based on error of overstatements, this and that. So it's also used to correct errors, verifying. We have various forms of journals. We have general journals. We have specific journal or special journals such as the purchase journal, sales journal, the cash book and return journals. So these are some of the things we must note about journal. So to correct these errors now, just in brief, to correct these errors, what do we need to do? Your heading is important. Your heading is very much important. So the heading will be what? That Ogogo what? Ogogo local government. Ogogo local government. Journal entries. Journal entries. Journal entries to record the loss of fund. The loss of fund. Now, you have your 2 points in the account. You have your debit side and you have your credit side. Now, let's go back to the question and see that the preliminary investigation carried out revealed the following irregularities which occurred and were discovered within the year. That included in the payment for the expenses under primary health care department were various duplicated vouchers amounting to what? 7 million. There were some falsification in the bills for items bought for the provision of water under other charges. Total discrepancy amounts to 3 million. 3 million. So in this case now, the accounts that will be affected will be what? One, primary healthcare, right? Department. They use these departments to commit fraud. Which other one? Other charges. Under charges. We use this department to commit fraud. So what will happen? To correct this, what will happen? What will happen to correct this? To correct it, we can have it as what? We can have our primary health. You can write primary health care. Primary health care. That is where we committed this error. And under primary health care, how much? How much was the fraud? How
7
much?
million.
7 million.
So under primary health care, that 7 million will be on which side of the account? The 7 million will be on which side?
Debit side.
Credit side.
Credit side. Credit. Credits. That is 7 million. 7 million. So let me just write millions here. Okay, let me leave it 7 million. 7 million. Now, which other departments is involved? Other charges. Other charges. How much is associated with that? 3 million. 3 million. Now, this is the error. To correct this error, what will happen? What will happen? To correct this error, what are we going to do? What are we going to do? We'll debit which accounts now? So included in the payment of the expenses under primary health care department were various duplicated vouchers amounting to, there were some falsifications. So we're going to debit non-personal advances because these payments, this fraud were payments associated with advances that are not given to staffs. You know, we have personal advance. The personal advance are advances that are given to individual staff to incur certain expenses on behalf of the organization. On behalf of the organization. And that is why when you incur those expenses, you'll be asked to retire it. You'll be asked to retire the expense. I believe you know the meaning of the word retirement. You know, sometimes when some people hear the word retirement, they would think maybe they say the person should leave work. Retirement means what? Means
To show evidence of expenses that was
Right.
incurred.
Very well. Yes. So the personal advance are expenses or money given to you in advance. Given to you in advance to procure certain items on behalf of the organization. So as you procure those items, you bring evidence that you've utilized the money, such as the receipt, and you take such items maybe to the store where it is a store item to get what we call the store receipt voucher, SRV. So this personal advance, they are money given to specific officers or employee for official purpose, which the officer must account for or refund after use. But in this case, these items are non-personal advance. They are non-personal advance. So they are from the expense or from the narration, you will see that there are money release for specific projects, and they are not tied to individual. They didn't mention anybody's name. You understand? So they are non-personal advance. So, but in the examination situation, once you put a narration, for example, you can put a narration and say, still primary health, but the money is coming back to primary health. Still other charges, but the money is still coming back to other charges. You still be very correct. But for the sake of this, I will just put non-personal advance. Yes, the major thing is let your entries be right. So non-personal advance. Non-personal advance. Now, this non-personal advance is to correct these errors. Now, for you to correct these errors, these total values, 7 plus 3 is 10, will now be what? Will now be debited. Will now be what? Debited. You can do it individually. 7 on the debit side, 3,000 or 3 million on the debit side. It's still same thing. It's still same thing. You will still get same results, same.
But I have a question.
Now, all right. So, what is the question?
Is that I have a
Yes.
question?
What is your question?
So, I thought expenses have debit balances. If expenses have debit balances, that's to say these things must have been debited before. So to reverse the entry, it should be a credit to me. Oh, that's what I'm saying. Maybe if you
No.
explain why
In
you
your-
credited.
When the money is going out, when the money is going out from your cash book, at what point is it going out? On which side of your accounts are you posting it that is going out?
Credit side.
On the credit side. Yes, I recognize that if you now want to prepare your individual account, for example, you want to prepare individual accounts of, let's say, what is the expense now? If you want to prepare individual accounts of, let's say, repairs, of, let's say, medical equipment, that item on your credit side, in your cash book, when you are preparing repairs accounts ledger, it will move to the debit side. It will move to the debit side. But now we are now looking at the cash as at when it is going out. When the money is going out, when did you commit this fraud? Which account did you work on to commit this misappropriation? The first is your cash book. Your cash book. Your cash book. And as it is going out, it is on which side? It is on the debit side. On the credit side. On the credit side. Now, to bring back this money, into your cash book, what will you do? Is to debit your cash book. With what? With what? The amounts that have been overstated as an expense. As an expense in your cash book. In your cash book. So when you are preparing your individual accounts, your ledger accounts, for example, repairs. If the value of repairs in your cash book on the credit side is 10,000, in repairs, it will come to the debit side as what? Cash, 10,000. Then when you are closing the accounts, it will have a debit balance. Very fine. To have a debit balance. But as at that point, that is not the point where the money is going out. You know, for every credit entry, there must be a corresponding debit entry. So in your cash book, your expenses are on the credit side. But when you're trying to prepare the individual account for those expenses, they will come to a debit side. They'll come to the debit side. So the essence of this journal is, at what point is the money going out? At the cash book point. The money is going out at that point. Now, to correct these errors, what will you do? You bring back the overstated amount in your credit side to where? To your debit side. Your debit side. So now, I don't know if that is clear.
Yes, it's clear.
So
Thank
now,
you.
in journal, I said we usually have a narration. Yes, I recall suspense accounts. We usually have a narration after preparing the journal, and such narration usually starts with what? We usually make a statement that what?
Being, being,
Being, so being, yes. Okay, are you raising up your hand, Chinedu?
yes, sir, yes, sir. Sir, I don't know. In journal, they said you must post your debit entry side first before the credit. I don't know. Does it really matter? Because yeah, you're posting the
Eh,
credit side before the debit side.
yes, it's okay. Yeah, it's fine. It's for the purpose of explanation. Yes, that is why I just
Okay,
have to do
okay.
it this way. Yes,
Oh, okay, okay. All right. Thank
yes,
you, sir.
yes. I want to explain the expenses first, but we can correct that too. We can correct that. Let me just add one. So just to copy this. So we can have it this way. So the narration can be what? The narration can then be what? Being being come up with it with words. Being fraudulent, being fraudulent
Fraudulent attempted.
payments or overpayment made and discovered within the current year. Within the current within the current year. Within the current year. So this is what that first part wants you to do, and you get your 3 marks. So now, moving to this B, that's prepare statement of financial performance for the year ended 31st December 2018. Statement of financial performance. Now, we've all agreed that is the income statement, which will show your revenue and your expenditure. And in the question, they've made it clear that that anywhere you see the code 1 is used for what? Revenue. Anywhere you see the code 2 is used for recurrent expenditure, and 4 is used for what? Capital expenditure. So the question is, are you going to have capital expenditure in your income statement?
No.
So the answer is no. So we can now prepare the statement of financial performance. I'll just draw the table. Anywhere there is need for workings, we'll quickly show the workings. Yes. So we can say the B, Guys, your heading is important. Guys, Ogogo local government. Ogogo local government. Ogogo local government. Statements. Statement of financial performance. Statement of financial performance for the year ended. The year ended December 31st to 18. November 31st to 18. So now, based on the information we have, what are we going to do? Based on the information we have, what are we going to do? We have our table. We have our table. So you have the code. Since they've given you code, you come up with code. Then you have your details. Your details. Then you have what? You have your values. Your values. So depending, you have your values. Let me go with million now. And I can have billions. So you have your values. So we start with our revenue items. With our revenue items. The revenue items. From the question, what are the items of revenue? You know, you can follow the code chronologically. That is, you have 1, 2 in that order. 101, 102. So looking at this, we have statutory allocation from federal government. This is a revenue item, 101. Do we have any additional information associated with this? With statutory allocation? We don't have. I don't think we have. We don't have any additional information. So what you just do is to record that amount. Record that amount. The code is what? Code 101. And what is the revenue item? Statutory what? Statutory allocation. Statutory allocation from federal government. From federal government. Statutory allocation from federal government. And how much is it? Statutory allocation.
49,500.
49,500. 49,500. What else do we have as a form of income? Revenue. We have 101. We have 102. Share of state internal revenue generated. Share of state internal revenue generated. So the code is 1002. And we have share of state's internal revenue generated. And the value is what?
8230.
8230. The value is 8230. It's 230. What else do we have as a form of revenue?
Miscellaneous receipts. No, sorry, commercial
Miscellaneous.
undertaking. Abi?
Other grants.
We have
No,
other
look at the
grants.
codes. Look at the codes. Let's continue with
Okay.
101, 102. Do you have 103?
1006.
Yes.
Okay.
Local license and fees.
Local
The
licenses
thing
and
is scattered.
fees.
Local licenses and fees. Local licenses and fees. Local licenses and fees. So these local licenses and fees, what is happening to it? Local licenses and fees. Do we have any information associated with it? Any additional information associated with the local licenses and fees?
Number 4,
Information
additional
4.
information.
Yes, information 4.
Have you read this manifest? Thanks to the evidence.
Additional information 4. That's okay, fine. That the following agreed revenue demand notices were sent to the indigents of the local government during the year. Fine. During the year. During the year. Now, this 130, the 130 in this question, this 130 in this question is what? Is what you received during the year, right? What you received during the year. Now, or the total value you have during the year. Let me put it that way. But in this 130, do you have any brought forward from the previous year?
Yes, sir.
Do you have any brought forward from the previous year?
We have.
And what is the value?
Okay.
What is
16
the value?
naira.
60.
Yes.
60. And where do you get that?
From the trial balance.
This is it. 60. Receivables, local licenses and fees brought forward. You see, as at the end of 31st December, this has been recognized before. So we don't need it in our current year analysis. It has been recognized before. It has been recognized before. 16 era receivables, 16 era. So now, and why are we talking about this? Is other local licenses and fees. In the current year, do we have, okay, as at the end, we have 150. So if we have 150 as at the current year, what would be the receivables as at closing? What you have as license fee is what? Is 150. Now, how much do you receive this current year? Or how much do you have this current year? So,
20,000.
no,
90.
okay, it will be what you receive, that is 130. The 130
Minus 60.
minus 60, that is 130 minus your opening receivable, that is 70. So if you have 70 as your receivables or as your earnings for that year, and you have a closing of 150, what is the difference between 150 and 170? The difference
20.
between
150 and 70.
the difference between 150 and 70 is what?
80.
80.
So that 80 means is what is still pending. Let's show it. This is very important. Let's show it. So receipts. So in your cash book, the items in your trial balance, where is their source? The source is where? The cash book, isn't it? So listed below are the revenue expenditure items for the year ended December 31st, 2018. Now, as at the end of the year, what do you have? The cash you have as an inflow in terms of revenue is what? Is 130. Is 130. That is cash. Is 130. Now, in this 130, there is a brought forward. This 130 you have as cash. The whole of this 130 is not for this year. Do you understand? Brought forward
Yes,
is
sir.
also part of the cash you received this year. So you don't need the one that you've recognized last year. So you need to remove the receivables brought forward. So you know the actual value you have for this year. Receivables brought forward. And the receivable brought forward is what? Is 60.
60.
60. So how much will you recognize for this year?
70.
70. 70. But as at the end of the year, that there is, what do we have in our, as at the end of the year, the additional information is telling us that what? That the following agreed revenue demand notices were sent to the indigents of the local government during the year. So during the year, we have 150,000 forwarded to the indigents as for them to pay local and license fee. Now, still, when we go to the question, our question, I want to see, okay. All right, so when we go to our question, the closing for that year is what? Is 150. But in that 150, how much have been paid? How much have we received in that 150? How much do we receive in that 150? It means we're going to have revenue earned last year, but not collected this year, is 60 naira. Now, what will be your current year revenue earned, but yet to be collected? What will be your current year revenue end, but yet to be collected? Your current revenue end, yet to be collected, can be what? Will be this 150. 150 minus 70. 150 minus 70 will give you what?
80.
80.
Will give you 80. So this 80 was earned in the current year. Earned in the current year, but is yet, let me write it. Current year revenue. Current year revenue earned, but not yet received. So they forwarded a demand notice to the indigents worth 150. But in this 150, 80 has been earned, but not yet received. This 60 here, I can tag it revenue earned last year, just for explanation purpose. Revenue earned last year, but collected this year. So now, what will now be your balance carried forward? Your balance carried forward will be what? The current year revenue earned, but not yet received. You know, we are working based on accrual basis. You recognize it when it is earned, not necessarily when cash is received. And that is why we are removing this value, because it has been earned before. So your current year revenue earned, but not yet received, this value is still outstanding. And this will be what? Your balance, your receivable carried forward to the next year. Your receivable carried forward to the next year. So now, going back to your statement of financial performance, your local license fees will now be what? How much will you transfer to your local license fee? Your local license fee, how much are we going to transfer?
80,000.
No, you know, this 150 is what? What's the total of what you earned in the year, isn't it? Let me write it. Earned during the year.
Both the ones that were received and the one that was not received now.
Yes, because this is accrual. So when you go to next year, this 80,000, what will happen? You will less it, because you've already recognized it in the current year. So you received this year in form of cash. This is yet to be received, but you've already earned it. So the addition of these two are what you've earned this year, either in cash or yet to be cashed. So the total that will be transferred to your statement of financial performance, your performance in terms of this revenue, in terms of local license fee, either received or not received, will be what? Will be 70 plus 80, which is 150. Yes, you can simply just transfer the value of in your additional information, that is this value. You can just take it there as your local license. we've shown. Of cash this year, 70. How much do you earn? So your local license fee, your local licenses, can you hear me, please?
Yes, I'm hearing you.
Your
Yes, sir.
local licenses, your local licenses and fees will be what? Okay, sorry, writing it somewhere else. So the code is what? 1003, and the value is what? Transfer to the account will be 150. Will be 150. Now, based on the question, which other code do we have that is revenue? Revenue item
1004.
104,
Sale of land.
104.
sale of land. This 78, are we just going to take this 78 to as our revenue? This 78, is this our revenue on sale of land?
No, sir.
Okay, why is it no?
We have an interest again on the sale of land.
Okay, you know, we sold 150 plots, right?
Yes, sir.
At what rate? 520,
Mm.
isn't it? So 520
Yes, sir.
multiplied by 150, you have what?
3 million. 3 million.
No, 520 multiplied by 150, you have what?
78 million.
78 million. But this whole 78 million, is it a revenue to you? No. What is the revenue to you? The revenue that will come into you will be the profit, isn't it? The profit
Yes.
you made on the sales, that will be the revenue. So what is the profit we computed earlier on? What will be the profit?
3
The cost,
million.
3 million. 3 million. So what you recognize as revenue based on the sale of land will be 3 million. Will be 3 million. So because you know that 78 million, in it there is cost. The cost, you have to remove the cost. Then what will be the profit? The profit is what you recognize as revenue. So we have 1004. We have profit on sale of land. On sale of land. And the value will be what? 3 million. The value will be 3 million. So which other revenue head do we have? 1004.
1005.
1005. And what is 1005?
Local rate.
Local rates.
Yes, local rate. And the value is what? 150. Do we have any additional information with local rates? If you come here, see this trial balance, receivables, you have local rate of what?
100.
100. So what will happen here? Based on what we've done for local license and fees, what will happen? These receivables, it has been recognized in the previous year, right? It has been recognized.
Yes.
So now you are now having receivables of 150. In this 150, there is 100. So you need to remove this 100. Do you understand? So it will be 150 minus 100, right? 150 minus 100. Just as what we've done here. Where is it? Yes, what we've done here. Let me write it clearly. So this is for local license. Local license. Local licenses and fees. And fees. So for local rates, it will be what? For local rates from your cash book, you have what? 150. Now, brought forward from the previous year, the amount brought forward from
100.
100. Brought forward 100. So what will happen? How much do you receive in cash just for this year?
50,000.
50,000. What is your closing value from the question?
185,000.
185,000. So for you to know what will be carried forward to the next year, 185 minus 150, you have what? Your current year revenue end but not yet received. So 185 minus, so this is a balancing issue. So a work back issue. So 185 minus 50 will give you what?
135.
So this 135 will be carried forward to the next year. Will be carried forward to the next. But in that next year, you will not recognize it as local rate again, because we are using accrual basis. So now, based on this, our performance for this year, this working is for a purpose, so that when you try to prepare your statement of financial position, you will recognize these receivables in that location. That is why this is important. Aside that, you just go to your additional information and pick 185 directly and move on. But you need to show these workings. So now, the next we said is local rates, which is 1005. And the local rate, we have it as what? Local rate, the value will be what? 185. 185. This is what we've earned for this year, even though parts have not been received in cash. But because we are using accrual basis, we recognize it when it is earned and not when cash is received. And that is why we have to put the whole value here, 185. Please, hope this is clear. Hope you are getting it.
Yes, sir. Yes, sir.
So the next code is what? The next code. The next code, 105. We have 106. We have 106. And 106, rent on local government property. Is there any additional information on rents?
Yes.
Any additional information on rent? We have rent again here. Rent of local government property, 50. This has been recognized last year, but we have it again. What will happen? So can you just solve that for me? Can you solve that? Rents. What will be the receivable to be carried forward? Rent of government property. The receivable carried forward will be what? If this is 160 And we have in our financial position, we have 50. Cash received, this would be 110. So I want to know what will be our current year revenue earned but not yet received in cash.
62.
Okay, 62. Because what we have here is 170 and this will be 62. So what you received in cash plus what you are yet to receive, everything is your end revenue during the year. End revenue during the year. So, but this 62 will be carried forward to the next year. So it means your end revenue in terms of rent of government property will still be what? 172. Will be 172,000. 172,000. That is 1006. So we have rent on local government. Rent on local government property. Rent on local government property. And the value is what? 172. 172. Any other thing? Any other thing? We've treated 106. Do we have 107? 107. We have 108.
Yes, there's 108. Other grants.
Okay. Other grants. So there's no 107, right? Can you check from your own end? $107. Okay, we only have 108. Okay, we have two 108. Two 108. Okay. I think this might be likely be a mistake. Yes. So we can pick one as 107, the other as 108. Or once we even put 108, 108, there is no offense in that because it should be an error. Should be an error. So now, are you seeing the two 108s?
Yes, sir. Yes, sir. Other grants and commercial undertaking.
Yes. So we can have it. We can have one as 1007. So other grants, right?
Yes, sir.
Other grants. The value is what?
560.
And the other 108. Can have it as what?
24.
And what is that? Commercial
Undertaking.
commercial undertaking. So we have it as 24. Any other thing?
109.
We have 109. And the content, the details is what?
Miscellaneous receipt.
Miscellaneous.
61.
Miscellaneous receipts. Miscellaneous receipts. We have it as 61. Any other thing?
We are done with code 1.
Okay. But any other revenue aside the code issues? Let's see. That instead of primary health included in the payments of this. Okay. Only 150. Capital grant from the state government was received on December 31st, 2017 and utilized in 2018. Capital expenditure during the year was for the acquisition of land for the new local government. For the new local government. Okay, I'm trying to see if we have any issue of grants. Any issue of grants. Any issue of grants. If we have, we need to recognize it as as revenue. We need to recognize it as revenue. But if we don't have, we're going to move on. We're going to move on. It's capital expenditure, capital grants from the state government was received in December. So have you checked from your side? We don't have any other issues, right?
Yes, sir. No.
Okay. So if we don't have, we can move to our expenditure. And move to expenditure parts. And move to the expenditure. So we can total our revenue. When you total your revenue, you have what? When you total your revenue, you're going to have what? When you total your revenue, we're going to have what?
Five eight eight 885. That is 58,885.
58,885. 800 and is something like this.
Yes,
58,
sir.
885.
Yes, yes.
So we have it as total revenue. Total revenue. And we can now talk about expenditure. 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 So what are the expenditures we have?
Recurrent
Expenditure. We can follow it. We can follow it also in that so expenditure. We have 2001
2001. Office of the Chairman.
Office of the Chairman. Is there any additional information regarding that? I don't think I've seen anyone. So we have 2001. Madam Chidima, you are eating. Not hearing your voice again. Office of the Chairman. We have it
67.
67. 67. The next code. Which other code do we have?
2002. Office of the
200.
Secretary.
Office of the Secretary. Office of the Secretary.
33.
We have it as 33. Which other one do we have?
2003. The Council.
2003. The Council. I don't think we have any additional information. 2003. The Council.
39.
39. Any other code? Any other code? 2004. And what is the value there?
Personnel Department. 18410.
Let's check. Is there any additional information regarding personnel? Personnel Department. Personnel Department. Any additional information? Regarding Personnel Department. Can you locate any?
So, exclamation number, is it 11? The following expenses were incurred but not settled at the end of the year. I'm seeing Personnel Department there, salary and wages.
How much is it?
23.
23. Okay. So 23. That is additional note what?
11.
It's 11. Okay. Okay, fine. That the following expenses were incurred but not settled as at the end of the year. So what will happen here? What will happen? We incur it this year, but we will not settle it, right? So it's an expense incurred during the year. So what will happen? Is it going to increase what we have or reduce it?
It will increase.
It will increase. So 23 plus what we have. 23 plus what? 18,410. 23 plus 18,410.
18433.
So that is what you will post. Personnel Department. 18. I don't want to show the workings again because we can stay here till 10 o'clock and continue showing those workings. So the next code is what? The next code will be what?
2005. Finance Department.
2005. 2005. 2005. Finance Department. So is there any additional information?
Yeah.
Finance Department. What is the information all about?
Expenses were incurred but not settled at the end of the year. Consultancy. 15 million.
15 million.
Insurance. 5.5.
Okay, very good. But let's check. Do we have any brought forward of these expenses? Do we have any brought forward?
Information 7.
Yes, information 7. That's included in the payment under what? Works and housing.
So included in the payment under
Included
finance
under
department.
finance department is the cost of office stationery. So are we supposed to include this 25 under finance department? is a no, right? Is a no. So what will happen? The value we have, we remove it. 31,100 minus 25, isn't it?
Yes, sir.
We remove it. We remove it. We remove it. So which other thing again? There should be one more. Now you can see finance department again. That the following expenses were incurred but not settled at the end of the year. Okay, not this one. There should be another one. There should be another expense. Let's see. Do we have consultancy? See this consultancy. You know, consultancy is associated with finance department. See it, consultancy, finance department is associated with it. So what is the balance brought forward we have? The balance brought forward we have is what? See it, accrued expenses from last year. We've enjoyed the service, but we've not paid. But since we are using accrual, it has been recognized last year. But we have it 15. What will happen? We have to less likewise. So it will be 13,100 less what? 25 less 15 consultancy brought forward. So when you do that, you're going to have what?
1360. 1360.
1360. So that is that. That is on one hand. Now, what are other issues we've identified? Other issues that we have identified.
Insurance.
Okay, fine. Insurance. That insurance of 5.5, what will happen to it? We have to add. We have to add. Which other thing? Consultancy fee. This consultancy fee here, 15. You have to also add because they are for this current year. The other ones we mentioned, they are for previous year, so we deduct. For the current year, what will happen? You add them. I think there should be one more item. There should be one more item we have to consider under that. Let's check what are the items that okay. We have other items that we can consider. Okay. This prepayment of insurance. Prepayment of insurance. What is likely to be the treatment? Prepayment of insurance. Do we have any additional information associated with that? Prepayment of insurance. Any additional information? Let's check.
I don't think there's any.
Okay. Okay. Let's see. Insurance. Okay. So when we add what we have, the result will be what? When we add those values, the result will be what?
13080.5.
13080.5. Okay. 13080.5. Insurance. Okay. Now, this insurance, I think I'm still having issue with it. Yes. This insurance, this is prepayment, right? This is prepayment of insurance. Now, we all know that prepayment of insurance is when you pay for something in advance. You understand? You pay for something in advance, but you are here to enjoy the service. You are here to enjoy the service. So now, when you pay for something in advance, when you pay in advance, this means that the money was paid in 2017, but the benefits of the insurance cover will be in what? In 2018. Will be in 2018. Now, so this 8 million was recorded as an asset and not as an expense. Not as an expense in 2017. It was recorded as an asset. Prepayment recorded as an asset, so not as an expense. Not as an expense in 2018. So now, since there is no any additional information regarding that, when you add all those values, what did you give say is the value, please? Let me waste time on that. Insurance. Finance department. What will be our expense? Our expense.
Is it 13,080.5?
13,080.5. 13,080.5. Yeah, 13,080.5. So this is the expense, but still that's prepayment. It was recorded as an asset, right? As an asset.
Yes, sir.
So in 2017, it was recorded as an asset in 2017. So in 2018, that value of insurance prepaid was not paid, but it was consumed in 2018. So the concept is this: for that prepayment, that is the opening value. The opening value. But since it's an asset, it's cash paid in advance. It's an asset as at that time, but now is an expense. What are we going to do? We are supposed to add it. We are supposed to add it to that to this 13,080.5, because in 2017 it was actually paid, but it is not recognized as an expense. As at then, is an asset. But now in 2018, it is not paid, but it is now recognized as an asset because it was prepaid. You understand? That is the concept I'm trying to come up with. As at 2017, it's prepayment, is an asset, not an expense. I don't know if you are getting this logic. Hello?
Yes, sir.
Now we're
Yes.
with you.
Yes, in 2017, it was an asset in 2017 because it's prepayment. It's prepayment. It's the organization that you are paying to, they are owing you. So to you, is an asset. So now that is now the year for usage, you will recognize it as an expense. You recognize it as an expense. So we need to add that value of 8 to this 13,080.5. So when we add it, this should change. This should change to what? To
13088.5.
yes, 13088.5. So this is what I'm trying to, I was struggling with. Yes, 13088.5. So now, based on this, please take note of this. The question is loaded. So now the next code will be what? The next code will be what? The next thing we have to look out for.
2006, Education Department.
Education Department. Education Department. 2006. Education Department. Education Department. Now, this education department, do we have any, what is the value of expenses associated with that?
44.
44. Is there any additional information?
Nope.
I don't think there is additional information. 44. Which other one? Two.
2007, Primary Healthcare Department.
Yes, 2007. Primary Healthcare Department. 2007. Primary Healthcare Department. Primary Healthcare Department. So, do we have anything about that? Primary Healthcare
This
Department.
7 million, yes, included in the repayments for the expense under Primary Healthcare Department were various duplicated vouchers amounted to 7 million.
Okay. Okay. So that's a duplication. What will happen to it? We have to deduct, right? We have to deduct that 7 million. To deduct that 7 million. Any other issue related to primary health care? The cost of medical equipment. The cost of medical equipment is not supposed to be part of that. The cost of medical equipment. The cost of medical equipment is not supposed to be part. It's not supposed to be part. Let's see any other thing here. Any other thing? Any other thing? So I don't think there's any other thing. So now 87 minus your cost of medical equipment, which is 35, will give us what? Will give us what? 87 will give us what?
87 minus what, sir? I didn't get it.
87 minus 35 will give us what? 52. Then 52 minus 7, which is the fraud, falsification issue, will give us what?
45.
45.
Sorry, sir, where did you get that 35 from?
That 35, from additional information, the cost of equipment was included in the expenses of primary health care equipment. See, it's included in the payment under works and housing, cost of motor vehicles of 25 million, while medical equipment costing 35 million was included in primary health.
Okay, yes, okay.
You deduct that. It's a capital item, it's not an expense. So The primary health care, the value will be what? 45. 45. Any other thing? The next code is what? Do we have 2008? 2008.
No, it's 2009.
2009.
Works and
20.
Housing Department.
Okay. Works and Housing Department. Mhm. Okay. Works and Housing Department. Works and Housing Department. I think there's not supposed to be to skip. So Works and Housing Department. Is there any additional information for Works and Housing Department? Works and Housing Department. There's an information on Works and Housing. You know, just the issue of see it included in the payment under Works and Housing is the cost of vehicles, 25 million. We are supposed to remove it, isn't it? Still included in the payment under Works and Housing is the cost of land of 100 million. We are supposed to remove it. You understand? We are supposed to remove it. Any other issues related to Works and Housing? Let's check this place. Repairs and maintenance, Works and Housing. What will happen? The following expenses
9
were
million. You add it.
but not settled. We add it. Very good. So the for Works and Housing, we are now going to have it as what? 2146
2030.
2030. Yeah. 2030. 2030. Any other thing? Any other thing? Works and Housing. Do we have 2010?
Yes, 2010. Commerce and Industry.
So 2010. Commerce and Industry. Commerce and Industry. Commerce and Industry. And what is the value? Any additional information?
38.
That's it. Any other thing? Any other thing? 213. Do we have 213? Or do we have
Oh, it's
212?
211. 211.
211.
Yeah.
And
Traditional
what is that?
office. Traditional office.
And what is the value?
14.
14. Any other thing? 212. Do we have anything?
Miscellaneous. 212. Yes. 212.
Okay. Miscellaneous.
218.
218. Any other thing?
213. Other charges.
Okay. 213. Other charges. Other charges. And the value will be what?
There's additional information concerning these other charges.
Okay, what is it? The additional information.
Expenses incurred but not settled. 6
Okay.
million. That is
This
utility.
will we have
Yes.
to add. And to add. So do we have any other additional information? See this one here, accrued expenses. Utility bill is what? 9. Utility bill, 9. So it has already been enjoined. You understand? Over time. So what will happen?
We
11
deduct it.
minus, yes, 11 minus 9. You have 2. 2. So 2 plus the 6 we have here
6, 8.
give us 8. Now, still, the fraud affected that, right? Affected other charges. The fraud, see it, that there were some falsification in the bills for items bought for provision of water under other charges. The total discrepancy amounted to what? 3 million. So what will happen here? What will happen?
We add back. Huh?
What will happen? 11 minus 9, you have 2, right? So 2 plus 6, you have what?
8. We have 8.
So 8 minus 3, this fraud.
We
You
have
have
five.
We have 5.
5. So other charges will be 5. Other charges will be 5. Any other thing regarding the expenses? Any other thing regarding the expenses? So if there is none, we can sum it up. We can sum. No, the expenses, we need to also consider our depreciation. Depreciation. Our depreciation. Now, this depreciation, how do we come about them? The depreciation. How do we come about our depreciation? Now, what is the cost of this asset as at the beginning of the year? We need to show it. The cost of the assets as at the beginning of the year. Let's see. A very long question. So, calculation of depreciation. There's a class going on already, which is same as this. So I'm not going to treat the other parts so that you can join that. Calculation of depreciation. Calculation of depreciation. So how do we compute the depreciation? We have our details. We have, what are the various assets we have? We have motor vehicle.
We have
We have
building.
building. We have what? Furniture.
Furniture.
We have what?
Equipment.
And we have
Plant
what?
and machinery.
Plants and machinery. Plants and machinery. Plants and machinery. So as at the beginning of the year 2018, what is the cost, or what are the cost of these assets? The cost as at 1st January 2018. What are the value of these assets as at the beginning of 2018? The value
Motor
of these
vehicle,
assets.
5 million.
Okay. Motor vehicle, 5 million. Motor vehicle, 5 million. Then that motor vehicle, is there any addition within that year? If you check the additional information, there is an addition, isn't it? That's, see it here. Included in the payment of that works is the cost of motor vehicle of 25 million, isn't it? 25 million. So there is an addition during the year. So as at the beginning of the year, The value of motor vehicle is what? It's 5 million. It's 5 million. It's 5 million. So let's have it. Million. 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 5 million. The addition is what? The addition,
25 million.
25 million. So, as at the end of that year, the cost will be what? Cost as at 31st 12 218 will be what?
25.
5025. Now, your building as at the beginning is what? Building as at the beginning will be what?
It's 15 million.
15 million. Okay, why is it 15 million?
Because they say land is 5.
Okay,
Land is 5 billion. I don't know.
okay, fine, it's correct. So now it means that your building will be what? Your building will be 15 million. 15 million. So your furniture will be what?
500.
Furniture. So the furniture will be 500. And the equipment will be what? And the plants will be
Equipment is 25, but there's an additional information of about 30 something.
okay. Yeah. Equipments. Equipments. We have it as
Yes,
what?
cost 25.
It's equipment, office stationery are included in the payment of finance department. So the addition of equipment during the year is what?
35 million. Medical equipment costing 35 million was included.
35 million. See it here. Medical equipment costing 35 million was included. So we have its addition during the year. Addition 35 million. And the plant and machinery, we have it as what? Plant and machinery,
5,000.
so we have it as 5,000. So this will be what? 15 million, and this will be what? 500. And this will be what?
25, 35.
2535. And this will be what? 5,000. So the depreciation rate is given in the question, right? Depreciation.
Yes, sir. Yeah.
Depreciation. Depreciation. So depreciation as at the end of the year will be what? Depreciation as at the end of the year will be will be what? Okay, let's do it this way. So depreciation as at the end of the year will be what? That is 20% of 5025 will give us what? 20% of 5025 will give us what?
1005.
1005. 1005. So depreciation charge for that year will be 1005. 1005. So we have it as depreciation. We have the rate already. The depreciation rate is given in the question. Depreciation. So this will be what? 1005. For building, it will be what? For building, it will be what? The depreciation
300.
to be 300. And for furniture, it will be what? It will be
50.
50. And for equipment, it will be what? For equipment,
380.25.
equipment 380.25. And for plant and machinery, it should be what?
750.
750. So we have our depreciation values. We have our depreciation values. Now, if you look at the additional information, we have a discussion about office stationery that was added to the finance, right? Added to finance. So it means that when you go to your balance, your statement of financial position, do you have office stationery in your store? Office stationery. See, it's inventory. It means your closing in 217 is this. So this is your opening, right? Of office stationery in 218. So what is the addition? Do you have any addition? Do you have any addition? The addition is what you bought that you went to add to what? So the finance unit. So your office stationery as at the beginning is what? Office stationery as at the beginning. That
Okay,
is,
it's 4 now.
we have balance. Balance carry forward is 4. Addition is what?
25 million. No,
25.
6.5. I mean, sorry,
No, it's
included in
25.
the payment under finance department cost of office stationery 25, while the value of office stationery based on stock sheet balance was 6.5.
So yes, that's 6.5 is the closing, isn't it? Is the unused
Yes.
value as at the end of the year. So balance as at 31st December 2018 will be what? Will be 6.5. So how many did you use if you are left with 6.5? You use how many? That is the amount
22.5.
you have to charge, 22.5. So now this 22.5 will be what you charge in your statement of performance. So now this will be all our depreciation values. We have to acknowledge them now. So depreciation we have it as what for each of those, or we can just add them to save. Can add them. Depreciation for the whole asset would be what? Depreciation for the whole asset. That is 1005 plus 300 plus 50 plus 380.25 plus 750 will give us what?
2485.25.
Okay. So we have it as depreciation. 24,845.25.
Oh, 2485.25.
Okay, 2485.25.
Yes.
Then we have the issue of stationery, office stationery, office stationery. And how much is it? The addition, the what was used, 22.5. So our total expenditure will now be what? Total expenditure will now be what? And you add 67 plus 33 plus 39 plus 18,433, 13,088.5 plus 44 plus 45 plus 2,030 plus 38 plus 14 plus 218 plus 5 plus 2485.25 plus 22.5. This will give us
36,562.25.
okay. So
36,562.25.
562.25. So the difference between 36,562.25 and 58,885,000 will give us what?
22,322.75.
Will give us the surplus for the year. Surplus for the year. Surplus for the year. You said it's what? 22? 22 what?
22,322.75.
0.75. Do we have any brought forward? Maybe in form of surplus or deficit? Any brought forward? See it, accumulated net surplus through deficit. Accumulated net surplus through deficit. So what are we going to do to this? We'll use it to reduce our profits. So we now have it. Accumulated net deficit. Accumulated net deficit. Net
Sir,
deficit.
the figure is in debit side of 497. Isn't that surplus?
Yes, it's surplus. No, we are not doing, we are just doing the difference. You understand? It's not you understand? We are not doing debit and credit. We are just doing the difference between what is it called? The revenue and the expenses. You understand? So the surplus we have is what? Is 22,322.75. I don't know if you get what I'm saying. That is, this is our total expenditure, 558,885.
Yes,
Our
I understand. I mean this accumulated net surplus and deficits on the
yes,
table. How do you
Yes,
treat this 497?
yes, since it's negative, we use it to, we say our surplus minus that value. You understand? The surplus we have less that value. If it is a surplus, we'll add. But since we are bringing forth negative value, and now we have surplus, what will happen? The surplus will eliminate the negative. You understand? I don't know if you get.
So, sir, if the figure was to be on this other side, that means it's surplus.
Yes, the surplus. And you can
Okay.
see the, let me go back to, okay, from the question. Okay, I can see what you're saying. Yes, debit, debit. So it's a deficit value, accumulated net surplus to deficit. So it's deficit, deficit. So now what are you going to do? Accumulated net deficit. We're going to do what? We're going to less 497.00. When you less, you have what? You have your accumulated net surplus carried forward. Accumulated net surplus carried forward. And this will be what?
21825.75.
21,825.75. 21,825.75. So this is what they want us to do in the part A, and in the part B rather. Very huge mark, 40 marks. The statement of financial performance. So the other part is the statement of financial position. The statement of financial position. Now, in the statement of financial position, it's just for you all your cost of your assets, then you less your accumulated depreciation. You know, the depreciation value we make use of in this our computation is just for the current year. So for you to solve in your statement of financial position, you need to get the depreciation as at the beginning. The depreciation value as at the beginning. And the depreciation value as at the beginning for this 5 million will be 20% of 5 million. And that will give you 1,000. So the accumulated will now be what? 1,000 plus 1,005 will give you what? The accumulated. Same for others. So once you do that, you get your carrying amount, that is your end net book value. You understand? Then your local rate likewise. All those closing items, carried forward items, local license carried forward, rent on local government carried forward, non-personal advance carried forward. All these will come as our current assets, and our inventories too. They will all come as our current assets. Then the current liabilities, all the consultancy that serve as opening, as closing rather, all these values that serves as closing will come as our current liabilities. Our current liabilities. These are accrued expenses. They will come as current liabilities. And then once they come as current liabilities, what will be the next thing? Our net surplus will come as our net asset or equity. Then if we have any reserve in the question, it will also follow. So that's we come up as our statement of financial position. You can try to see how you put that together, and you can go over the question again. Yes, we decide to solve that one tonight. We'll stay here till. But the major thing about the question is what we've trashed out, those additional information.